mid-cap radar. For now, the market going strong, so about 380 points higher on the Sensex. Just come off marginally, but I don't think a lot to worry about. But let's focus on the big stock, Jet Airways. The stock is higher, and this is ahead of the outcome of the Etihad Airways board meeting that's underway. Banking sources tell CNBC-TV18 that Etihad is preparing a fresh round of fund infusion, something that could be very, very integral for Jet. So Ritu Singh, our correspondent, is here to bring us up to date. Hi, Ritu. What are the proposals that are being considered?
We're given to understand from our sources that the bank-led provisional resolution plan for the revival of Jet Airways is still under discussion from various stakeholders. But what we've been able to gather so far is that Etihad is looking to cap its stake at about 24.5% to avoid that 25% mark and to avoid making an open offer, as SEBI has made it very clear that no exemptions will be granted to any entity other than lenders. We're also given to understand that Etihad is looking to infuse anywhere between 1,600 to 1,900 crore rupees to maintain its stake at 24.5%. In addition, as we had reported, NIIF, backed by Ardia Fund, will look to invest another 16 to 1,900 crore rupees and pick up 19.5% stake in Jet Airways. The lenders will also be converting about 1,000 crore rupees of debt into investable instruments like the CRPS and hold a 30% stake after the restructuring is completed. Naresh Goyal's own stake, as we have been reporting, will fall to below 20%, somewhere in the range of 17 to 18% after the restructuring is done, and he is required to bring in another 450 crore rupees from his liabilities in Jet Airways. Do remember, we had reported Naresh Goyal has already brought in interim funding of 250 crore rupees, which takes his total investment up to 700 crore rupees. Just yesterday, Naresh Goyal had written to Tony Douglas of Etihad asking them to invest 750 crore rupees by next week as interim funding that is critical for the airline's operations. That is something we're still awaiting. What happened in the Etihad board meeting, that outcome is still awaited, but this is what the memorandum of understanding that is under discussion by the promoters of Jet Airways and Etihad Airways currently is, and we'll keep you posted on any developments after that.
Big developing stories, but hopefully the end is in sight and money is in sight, more importantly, for Jet Airways. Let's move on. HDFC Standard is reeling under pressure. This is after the promoters have divested about 3.5% stake in the offer for sale. Of course, they have an option to divest close to about 1.5% more via the green shoe option. Abhishek joins in with more details. Abhishek?
Well, Rima, Standard Life is looking to offload nearly 5%, or let's say about 10 crore shares in HDFC Life. So that has an option of green shoe option of nearly 3 crore shares and a base of 7 crore shares. So they have fixed a price of 357.5 per share, which is at a discount of over 8% to yesterday's closing price. So Standard Life right now holds about 29.2, which post this issue or exercise in terms of offer for sale will reduce by nearly 5% to about 24.3, and through this offer for sale, Standard Life will get about 3,557 crores. Back to you.
Thank you very much for that. Let's move on and get you some corporate opinion as well. Varun Beverages, the bottler for Pepsi in India, spoke to us in detail about their outlook post the consolidation of the recently acquired South and West territories from Pepsi.
We have applied to the CCI, and we hope in the next couple of weeks we should have their approval, and as soon as we have their approval, we'll consolidate the South and West territories with the Varun Beverages existing territories. The new geographies are going to be at the same royalties or concentrate price, what we call. We have a fixed concentrate price based on our selling price, and that will remain consistent after including the new territories also. We are expecting from April 1st, hopefully, to consolidate this with our balance sheet, and we expect 35 to 40% growth in our volume and value numbers going forward, and we expect in the first year at least a 30% EBITDA growth. So that's what we are looking at once we consolidate the territories after April 1st. That is what we are looking at for the year 2019. PepsiCo does not disclose their profit margins, but we feel that it's a similar business, and going forward after a year, there is no reason why it should not be on similar basis like we have the other territories.
Well, the sentiment in the Indian markets has made a dramatic comeback in the last 2 weeks, with the mid-caps and small caps seriously outperforming. Today, of course, it's the frontliners which are leading the pack, and that is buoyed by very strong foreign inflows. In fact, the FI inflows in the month of March have crossed that 8,000 mark, and that's pushed the Sensex higher to levels that we last saw before September of 2018. Earlier today, we got a sense talking with Cameron Brand of EPFR Global to get just to talk about the FI flows returning to India. Listen in to what he had to say.
We've seen a really significant rotation now from developed market funds of pretty much all stripes to emerging markets. Still seeing more of a preference for diversified exposure, but overall this is now an established trend, which I think is sort of driven by a sense that emerging markets, certainly in relative terms, have more upside than their developed market peers. And the Modi administration off and on has been seen as a sort of a reformist one. There's a very, very clear pecking order, and it is at the country level quite simply tied to perceptions that there may be a reform story. It's certainly coming in sort of shaded to the ETF. If you look around for sort of the major risk factors, the U.S. is moving into its next election cycle. So, there's not too much you can hope from the current political dynamic. And Europe is also facing, as it has been constantly for the past decade, a series of challenges which are making investors step back.
Very, very steady and strong session for our markets. With that, we take your leave on mid-cap radar, but we keep the spotlight on the Nifty Bank, which is now just about 38 points away from its all-time high of 28,388. So let's see whether in the last 1.5 hours we can conquer those record levels on the Nifty Bank. Not just that, on the other side, Mutual Fund Corner will answer all your mutual fund related queries, so stay tuned for that.